Good afternoon.
Hey, William, how are you?
Finding you. How are you doing?
Doing great, thank you.
Great. I was supposed to call you.
You were what?
I was supposed to call you about something, but I'll remember this week to do it. Between now and Monday, I'll call you.
Perfect. Yeah, anytime. Let's make sure, resume, share. So we're live and Jess, it says sharing is paused. Oh, no, that's not what I wanted to do. Let's do this. Oh my goodness. I can't get my I can't get my screen to share, Jess.
Okay, let's see. End the screen sharing again.
I mean, it says you are sharing, you are screen sharing. What's that?
Yeah, but it's on our end, we just see it just says Annabelle Pacheco has started screen sharing, but we can't actually see your presentation right now. So stop sharing your screen for a second. Okay. And now try clicking that green screen share button again.
Okay, let's make sure we can. Okay. Now,
Nice.
do you guys see it? We're
Yes.
good.
Mhm.
Oh, technology and it's Apple. It's all Apple. I'm so new to this, and it's just a learning curve. I'll get through. And I've been like
By the time we
fighting
all
it.
figure it out.
I know. Yes, and I've been fighting it. Like I keep using my old, my old computer. I'm like, because I know how to use it, and I'm just like, no, I'm pushing through. I've got to learn how to use this. All right, let's make this. Let's admit. All right. Okay, I think we're good. You guys can see my screen, and you guys can hear me. Awesome. Perfect. All right. Well, thank you so very much for joining today's call. My name is Annabelle Pacheco. I am an investor and a real estate broker. Been in business for 24 years and just part of a global real estate company named EXP. I really, my goal for this weekly call is to share with you guys the steps that I took in purchasing my first multifamily deal. I like to bring guest speakers from the multifamily space to just share with us and really expand on our knowledge and kind of let us know what's out there, right? What's actually selling, what's going on in the market, so that you guys have just enough information to go out and do this for yourselves. I encourage everyone to participate, ask questions. This is the only way that you're going to learn, and this is a safe platform for you guys to just share information with each other and really just learn from each other. I want you guys to know that I'm not selling anything. I'm not offering anything. And I am by no means a financial advisor. I'm just sharing my story with everyone and hopes that, you guys can go out there and do the same thing. A little bit about me. I started my career in the mid 90s. Started in the mortgage industry, and back in those days I was refinancing and actually representing buyers, 9.5% interest rates. So we are definitely very different market right now. I have purchased over 100 properties throughout my career, have rehabbed and flipped properties, have also managed units 2 to 4, have kept those and, just managed them until they were at a point where we could sell. And pretty much in 2001, deviated a bit from real estate, opened up a restaurant. We built this from the ground up and had a staff of about 15 people, including managers, chefs, and servers. Now, the last 10 years of my business, I have focused 100% on representing both clients in the residential and the commercial real estate. I've purchased my first multifamily deal in 2015, and that was 34 doors. And I'm going to share with you guys, really, for me, I had been doing for so many years just the rehab and flip that I thought, okay, there's got to be another way to create, cash flow and create generational wealth. And multifamily was it for me. So, I thought to myself, how can I make our money work for us? And here are the reasons why I invested in multifamily property. And really, I hope it inspires you guys to do the same. So number one, it was cash flow, right? I'm looking for a way to create cash flow. And cash flow in a nutshell is your rental income minus all of your expenses. That's what you make. That's what you take home. Oops. Sorry about that. Number two, it was, how cool that you actually can have your tenants pay down your loan every month as you're creating, right, that cash flow, and you're paying off your mortgage. Your tenants are paying down that mortgage. Number three, it was appreciation, right? We're buying a property in the hopes that over the long run, this property is going to appreciate, right? And we do enough research. I mean, you study the market to feel comfortable that, you know what, it is going to appreciate. Number four, it was tax benefits. And for me, it was depreciation, right? Which allowed me to expense a portion of the physical structure each year for my taxes. And then the second part was the 1031 exchange, which allows you to defer that capital gain tax, and there's no limit. You can do this as many times as you want, as long as there's good properties out there, right? And they make financial sense. Like right now might be a little hard, but overall, I think that, I can tell you, I missed out on some great opportunities. When I purchased this one, I was offered probably like 6 months into the purchase, I was offered 100 doors at like ridiculous $25,000 or $30,000 a door. And that's nothing. I mean, it's today, those are selling for 100 or 110 a door. But anyway, you know what? You have to be mentally ready. You have to be prepared. And this was my first deal. And I was, very overwhelmed. And I knew there was a lot of work that needed to be done. So for me, it was just more like I needed to step back. But if I would have had that, I guess, more aggressive mentality, I could have purchased that or figured a way to do that, right, with partners and syndications. And I'm going to go on. I'm going to explain later on. When I purchased, I was really on my own. I wasn't part of any group. I wasn't networking. I wasn't making connections. And I think that is critical in today's market. You need to connect with agents. You need to connect with people in the multifamily space and, ask questions. You need to connect with lenders. You never know where that next deal is going to come from. Never know. So a little example of my property. I purchased a property that we label as a value add multifamily, right? And this is just, in a nutshell, it's a property, and I kind of wrote the definition there. So it involves buying the worst property in the best neighborhood, and then you increase its net operating income and the value of the property through renovation. So that's exactly what we did. We purchased a property for $850,000. So that was 34 doors. And at that time, when I reached out to the agent happened to be the owner of this property. And I was a buyer who happened to be an agent myself. So we were kind of in a position where we started talking, we hit it off, and we just started negotiating. And I asked him, it didn't say anywhere on the listing that seller would finance or carry a note, but I asked if he'd be interested in carrying a note, and he said yes. So it just made things so much easier for me. I mean, I was ready to go for a traditional loan, but to be honest with you, this was just so much easier for me to do. And we agreed. And I mean, it was done in like 30 days or 45 days. We went in, we began extensive remodels as soon as we were able to vacate the tenants. A lot of them were on month, actually almost 100% of the units were on month to month. They were way below market value. And all we did was just start giving 30-day notices and worked in increments of 5 or 6 units and vacated them and started our remodel and just started updating the units and increasing the rents. So we did this, we went full force, like first 6 months, first year, we were just continuously remodeling. And as we had units become vacant, we just remodel them. And by year 2, we were in a position when we actually went to refinance, the property doubled. It had appraised at 1.6 by then. And it allowed us to cash out about $1 million. So we got back all of our money. I mean, we have no money invested in this property. And back then we were at a 65% loan to value. Today's value is $2.8 million. About, I would say 80% of the units have been completely remodeled, and rents have increased. I mean, like 5 times. When we bought the property, rents were $400, $500 a door. It was a roach infested property. I mean, it was very, very bad. And we needed to go in there, and we knew we were going to be doing a lot of work to it. But then again, I've had the experience. We've rehabbed, we flipped. This was actually so much easier because all the properties were right next door to each other, and it allowed us to negotiate, get a better price, right, on the work, cabinets, just everything was a lot easier. So we did really well there. Here is there's 2 buildings. This building here, 24 units, 1 bedroom and 1 bath. And then this is the front, which has 10 units, 2 bedrooms, 1.5 bath. They're townhouse style. They have a small backyard in the back. So any questions so far before I go into the just more learning and talking here? We're all good? Okay. If you guys have any questions, please, just let me know, because there's definitely a lot of information.
I mean, since we're kind of on the initial side of it, 350 grand isn't, just a little bit of chump change laying around. I mean, it's quite a bit of cash for anybody to raise, especially anybody with a W-2. Did you pull partners together to get that money, or did I miss something? How did you raise that much cash to come in on a down payment?
So I had a property that I had rented out when the market kind of took a turn and it went down. We knew it was in a really good area, and that the value would come back up. And so we kind of, we could have walked away, right? Everybody was short selling their properties, walking away. And we thought, no, you know what? We're going to hold on to it. Even if we have a small negative, like out-of-pocket expense, I have a feeling that this is going to kind of recover and we'll do well. And again, I'm in the business, right? I study the market, and it was just it was a business decision. And so we rented it out. We rented out this property for as much as I possibly could, keeping my out-of-pocket expense low. And when we sold it, just, we made some decent amount of money from that. And then I've also had done some other flips, which I had saved money from those flips, and we had enough to go. I mean, we had about $500,000 that we were ready to invest.
Nice. Was that a 1031 transaction that you utilized to?
No, No, I didn't have to do a 1031 exchange. I had lived in the property at one point, so I was able to write it off, yeah, as my
Great.
primary. So
Great.
you know what, it was a blessing, and to me, this was just like, it was too good to be true. Like, I can't even believe that I'm sitting here today and I was able to actually find this property. I mean, I worked really hard. It took me about 5 years to get to the point of actually pulling the trigger to buy apartments. And, you know, in the meantime, I was just preparing myself, right? And so they say there's no such thing as luck, it's just being prepared, right? When that opportunity arises.
Right.
And we really were.
And then how did you find a place in Texas where I mean, most brokers are very regional in their searching ability. Did you have another broker connection in Texas, or how did you find that property?
You know, no. So I had a mentor friend who had bought in Texas. So, and I know him, I know how meticulous, and I know how, I know the stuff that he does, and I felt comfortable identifying, okay, I'm going into Dallas, right? Like, that was off the back. It was one big load off of my head. I didn't have to study another or a new market. It was, I'm going to follow in his footsteps. I'm going to buy in Dallas. However, the properties, I was searching everywhere. I was on LoopNet, on just, I don't even remember what sites, but I was just out there, you know, even talking to some agents out there. But this property popped up on LoopNet while I was out there. So it was just meant to be. Yeah, it was meant to be. I saw it pop up. And I told my friend, I said, hey, listen, I think this is a good opportunity. Are you familiar with the area? And he's like, yeah, you know what? That's not a bad area. I said, all right, we got to go see it. And so, you know, I dragged everyone. I'm like, come on, we got to go. Let's go take a look at this property. And he's like, well, if you don't buy it, I'll buy it. And I knew that was a good deal. So I did everything in my power to make sure that I was going to buy this property. And, you know, just connected with the agent, and he was a young kid, 24 years old. His parents gave him this property and said, go, you know, run it. You live off of that. And he didn't do a really good job. And so he was kind of like in a position where he needed out, like he really needed out. And we negotiated, he financed it. I mean, it just worked out fantastic.
Yeah. Yeah. Nice work.
A win-win for everyone. And so now that I've learned a little bit more about how this all works, that's why I say that it is really important to connect with a lot of other people in the multifamily space. You know, everyone's talking to different sellers and even owners, and you just never know what opportunity they come across. And you may not have it all to yourself, but you can definitely partner up with someone, right? If they have such a great deal and opportunity. So I think that I worked hard to get to that point, and I was just in a position where I was like really ready to pull the trigger, and that property was there. Good questions. Very good question. Any other questions? All right. So today I wanted to talk to you guys a little bit about like getting approved, right, for a loan. I ended up doing this at year 2, but when I purchased the property, I kind of eliminated a lot of this stuff. And again, I say I'm really happy I did, because I wasn't familiar with all of this, and it just was going to add an additional stress on top of what all the work and everything else that I needed to do on that property. So let me just kind of go down this so that way you guys can get an idea. So, and what I'm giving you right now is for you to just quickly identify and see if this property actually will qualify, right? And this will only give you guys like a very broad picture, but it's also like a quick way of knowing, of having like an indication, right? If it's going to be a positive or negative, if this is going to work or not. And what you're going to get from the seller is you want to get a trailing 12 months. You want to look at month by month operating statements and profit and loss, and a current rent roll. These 3 pages will give you a lot of information about the like just what this property is actually producing. Okay. And very important too, that the borrower's net worth must be greater than the loan amount. And the borrower also has to have liquidity that's greater than 10% of the loan amount. So as you can see, when you're going to go out and buy and get a loan, there's other factors that also the lender will look at, but really at the end of the day, it's what this property is producing. So what the property produces is how they determine if you're going to get a loan or not. Okay. Now, I'm going to give you guys some items to get a formal quote, right? And this is what a bank actually will. I mean, we're talking like a full underwriting, that it's a commitment to close, that you're going to provide these things to the lender, and the lender's going to come back and say, you know what? Yes, you're approved, you're good to go. So for what you provide, there's 2 things. There's property, and then there's the personal stuff, right? So property, you're going to need to get last 3 years of operating statements, okay, profit and loss. You want to get trailing 12 months, month by month profit and loss, and current rent rolls. You want a summary of CapEx to date, like year to date, and stabilized budget, right? A stabilized budget is pretty much if the property, it's a property's income and expenses averaged over a 5-year period. So if the, for example, my case, my property, I've owned it for 6 years. And if I'm selling it, someone's going to say, hey, you know what, provide us with that stabilized budget. Okay. That's what that is. And then here, pretty much property, right? They're going to need property details. They're going to want to see photos, address, the description, the unit mix, the age, and the construction type. That's the property. And all this information I'm giving you is what you will actually need to provide a lender to get a formal quote. Now, on the borrower end, you're going to need to provide the name of the entity. Many cases, a multifamily, very rare do you see an individual purchasing the property. They usually have, an LLC, a corporation, something that they have, an entity. So they're going to need to provide the name of the entity, the organizational chart, personal financial statements for each guarantor. So each person that's going on the loan, you will need to provide that financial statement, right? The bank wants to make sure that you're strong. They want to make sure they see a resume, your bio. What have you done in the multifamily space? What's your experience? Property management company info if you are not self-managing the property. In my case, when I did refinance, right, to go into one of these loans, we self-managed our property. I hired a on-site manager and an on-site handyman. They got a discount on their rent, but they were there 24/7. They were our eyes and ears. And I'm in California, the property's in Texas. In any individual owning more than 20% of the GP will be underwritten as well as a guarantor. LP partners are not underwritten. So if for whatever reason you're raising capital and you're bringing other people, the limited partners are not underwritten. And then for guarantors with limited experience, a strong property management company will be required. So if you've not been involved in, you've not been involved in managing any properties, the bank will definitely have a hard time letting you self-manage it if you don't have enough experience doing that. And that's why you will see in many of these partnerships, someone, if that one person that's maybe going on as a guarantor, he has the financial backing, but he may not have the necessary experience in managing, he brings someone else into the deal that has that. And then that's kind of how, these groups are formed.
So I have a question on that whole guarantor part of it. If there's a 20% plus partner in there and they are acting as a guarantor, does that mean the bank, if the project fails or for some reason goes belly up and they have to foreclose, can they chase other assets of those guarantors, or is it just a simple trust deed process on that singular property?
On this particular loan, I have, let me just kind of go all the way to the end, because that comes to the end. It's a non-recourse loan. So pretty much in the case of default, it doesn't allow the lender to pursue anything other than that collateral.
Thank you.
Yeah. Let's see here.
That's a great explanation, because I see a lot of like big financial houses like George Smith Partners financing deals, and they'll list the deal as recourse or non-recourse. And I honestly wasn't completely clear on what kind of recourse they're talking about.
Yeah. So non-recourse, I mean, it's a little bit, as you can see, there's a lot that you have to provide, right? But it's worth it, at least to know that, I'll be honest with you. When I went into this, I thought to myself, I've spent so much money into this property. There's no way, it didn't make sense to me, right? It was just, there's no way I'm going to lose this property. But you always want to just protect your assets and kind of keep things isolated. And I just thought non-recourse was the way to do this. And even my mentor at that time had said, you know what, if you're going to do anything, just try to go the non-recourse way. So, all right. So in addition to items listed in my previous slide, which was the formal quote, following documents are required prior to closing. So, okay, here we're looking at, they're going to need, underwriting will need third-party reports. They're going to, give me a second. They're going to, let's see here, third-party reports. They may have other questions that come up, and they'll need additional documentation for underwriting that you'll have to present. And then, let's see, you also have, as a borrower, a W-9 for the borrower, a final organizational chart. You want to provide articles of incorporation, right? They're going to want to know who's who in that entity, executed operating agreements, and they want verification of your EIN or the federal tax ID number. If you guys have any questions, please, let me know, because I just kind of keep going here. And then here's the property list of things that they will require. They're going to want current rent roll, and you want all the months up and including up until when you're closing. Okay. And they're going to ask you this at the beginning of the transaction, and they'll ask you for this at the end of the transaction as well.
Did you have a property manager at that point?
No, I've always self-managed the property.
That can be a lot of work for just a multiple property owner to keep tabs on all these different people and rents and statuses and late fees. And I'm just talking for personal experience with only 5 properties and 10 tenants. I get overwhelmed sometimes. So,
there's a lot of softwares out there that actually make this a lot easier as well. Since we had a manager on site, and really 34 doors is not a lot for, once you have things up and running and they're on a system, it didn't warrant, or it didn't make sense for us to hire a management company. We pretty much formed it ourselves, and we had weekly calls with our manager, and anything comes up, she'd let us know. Remember, she was there. We weren't really handling things. We're just kind of overseeing, and we're making sure that things are getting done. Did we maybe miss a couple things, or did a couple things fall through the cracks? Probably, but it wasn't enough to affect us. in any way when I'm in California and, the properties in Texas.
Curious if you're trusting that manager with cash and payments, or did you set up an independent payment system, auto draft requirements? Can you share a little bit more about that?
Yeah, absolutely. So we originally they were dropping off cash. We eliminated that with just money orders. When we started, we thought, okay, you know what, we want to do the just easy. They can come to the office and with the computer, they just press send. Their money comes out of their bank account and it goes right into our bank account. It was just easy. Or if they can download the app, they can do it from their phone. And just unfortunately for the I guess my the demographics and where I was at, it was impossible. They couldn't do it. We did it for about 6 months and it was more of a headache to have them pay on their own. A lot of these people they don't have checking accounts. They don't have access to all this technology. And, we're trying to simplify and make things easier for them. And it was just a big headache. It was just a big headache. And you know what? We just opted to money orders, and those money orders were dropped off, and the manager would make those deposits the first 3 days of the month. And it was just very simple. But
Great.
there
And
are,
then- And then your manager,
I'm sorry.
my fault. Go ahead.
No, I was just saying that there are apps that can make this, a lot easier. No one has to go to the bank, but just unfortunately, the demographics there, they just couldn't do it. And we tried, and, and it just didn't work out. And then we were actually having a hard time. We were losing money because the money would come out of their checking account. They didn't have, let's say they'd submit their payment. If they don't have the funds in their checking account, it would throw everything off on our account. It really was a mess. It didn't work out for us.
Thank you.
Mm-hmm. You were going to ask something else.
Oh, I'm dealing with a similar situation, workforce housing, lower income tenants, and my properties are in Washington State. So it's compounded by benefits that the state provides and people, protection against eviction. And now I'm having to work with people over the course of another year to pay back all their free rent that they got from the state. So, and of course the state isn't paying me. I just have to do this because I'm obviously rich and a landowner or something. So, so I've debated using these payment services, and I have some tenants going into the bank and trying to deposit cash, and the banks don't want to take cash. So they got to buy a cashier check at the bank, and it's just kind of a mess. And I'm debating, using one of those services. So, but I was, also you have to have a really good manager. If your there's the manager that gets a discount on their apartment, and then there's the manager that's kind of salaried, right? Because maybe they've got a husband or an uncle or somebody, they're going to do a lot of the maintenance. Can you provide any insight there on how strong your manager was, and if they were capable of doing maintenance, or they just managed handyman?
So we had the our manager she was pretty hands-on. We didn't expect her to do any of the stuff. That's why we had the actual handyman also on site, that she would have him do like the physical, like harder labor stuff. But if she needed to go take care of something, she would just go take care of it. If it had anything to do with tenants, with collecting rent, with giving them warnings, with she was just hands-on. She was there. They knew, they respected her, and they knew, and that's really, you got to get someone that your tenants are going to respect. And they knew that when she was walking around the property to just check on, also like if there was any trash or anything around there, they would put their stuff away, or they knew that they just couldn't throw their stuff around, because she'd give them a warning. And I think you get like 2 warnings, 3 warnings, and then you actually get fined. So, you just have to kind of implement the rules, and we lucked out. We did have a very good manager there on site that just helped us. It alleviated us from having to do the that work.
Great.
We don't take, well, what I recommend to anybody is if you're going to buy property in a landlord friendly state. Texas is 100% landlord friendly. We didn't have any issues during COVID, maybe one, and they caught up very fast, but no one stopped paying, and there were no real issues during that time.
Great.
All right. Any other questions? Okay. All right, very good. So let's go down like what the lender wants to see when you are referring to now like the property. They want to see current rent rolls, right? All months up until the closing, operating statements. They want the ALTA survey, which is a detailed land parcel map showing all the existing improvements and of the property, utilities, significant observations within the insured estate. They want to see all the commercial leases. They want to look at all of your laundry leases. Any kind of leases that you have on that property, this is what the bank wants to see. They want to look at service contracts, right? Trash removal, pest control, landscaping, pool services. I mean, just anything that could reflect, right, a negative or a positive financial or income on the approval. Someone asking if I have a landlord-friendly state list to share. I don't. I just know of a few, and I just
Annabelle, I think I have one, so I can look it up and put it in the chat.
Fantastic. Thank you. Thanks. That'd be good. Let's take a look at that. All right. Let's see here. They're going to want to see title, okay, certificates of occupancy, rental licenses, proof of the building code compliance. They want copy of the deed, a zoning letter, and a designation of counsel and designation of insurance agent. Okay, so this is all the stuff you need to provide the lender as you're getting pre-approved or going through this loan process. The guarantor needs to provide a schedule of real estate owned, right? That's where, that's how the bank determines if they have that capability, right? They have that 10% authorization to release bank and credit information, and then verification of deposits, like your bank statements.
Did they require you to provide, I'm going through a refi right now on one of my, just one rental property, and they want copies of all of my leases for all of my properties?
Yeah, that's pretty normal.
Okay, so you shipped them out like 40 leases?
We did. We had to give them every single one of our leases. Yep.
Wow. Okay.
Yeah. I know. That's exactly, this is the reason why I didn't want to go through a loan when I had the option to negotiate with the seller and have him just do the seller finance. I'm like, okay, that's one less thing I have to worry about. Just for now, like, let me get my feet wet. Let me kind of figure all this out. I mean, now it's different, right? Like I've been there, done that. Okay, it's a little bit easier. You kind of know what you need to provide, but it's still pretty tedious. So
I'm super curious what kind of rate you offered the seller. I recently had to close out a 1-year note. COVID hit right after I bought this place. So really put the crimp on me, but I took a year note on a private, contract. And she came knocking. I mean, it was on the 366th day. She's like, I need my money or I'm going to foreclose on you. And so I had a heck of a time during COVID trying to, cash her out. And she was making 12% on her money, which was pretty steep, right? It was a very attractive rate of return. What kind of rate did you pay on your hard money loan? How did you negotiate that out?
Oh my gosh. I want to say we paid 6%.
Oh, wow.
I know.
Great deal.
I know. Someone was looking out for me. That's all I could say.
You're a good negotiator.
And it's funny because my mentor was used to, he'd pay cash on his deals. He had a lot of money, so he could go in there, pay cash, and he wouldn't ask for anything. And when I said to him, you know what, I'm going to try to negotiate. I mean, I've negotiated for my clients, right? I've done crazy stuff negotiating for my clients. I said, it's my turn. I'm going to negotiate for myself. What's the worst that can happen? He says no.
Yeah,
right?
Come back again. Yeah, come back with
That's
something
right.
else.
And so I just, you know what, I went all in and I said, I told my mentor, I said, I'm going to ask him if he would do some, like seller finance. He's like, oh, you're going to lose the deal. Don't do that. I'm like, the worst that can happen is he says no. And then I just proceed with my loan. And he agreed. I mean, it was perfect. It was an awesome, I guess it's just an awesome transition into, from 0 to 34 doors. It was a smooth transition, and we went in and did what we knew how to do, which was rehab and fix and get those properties up and running again.
Great presentation so far. Great information.
Well, thank you. I'm glad you guys are finding, hopefully you guys are all finding this valuable. I mean, again, these are things that I've gone through, and you know what? I'm just kind of sharing this with you guys. Oops.
Will you allow us to have a copy of the presentation?
Sure.
Because this is really important information to kind of have at your disposal when you're going for this, when you're going for a property.
Yeah, I'll make sure that you guys get that. You normally get a recording of this call at the end, and I'll also include a copy of this.
Awesome.
All right. So did we do this section here? Because I think we did. Property management company. So you list, if you have to bring in a property management company, this is what the bank's going to want to see from them, right? A list of the current properties that they're managing, executed management agreements. They want to see a marketing plan. They want to see marketing materials. They want to see sample leases, expenses shared with other properties. If, they're managing more than what you like, let's say your property, and payroll analysis. Okay. And then you have the standard third-party reports, which are termite inspections. Not every state has termite, but termite inspections. You have your appraisal, you have your phase 1 environmental, and then you have a project capital needs assessment, which is just an inspection of the property, and it estimates the cost to maintain it over time. Okay. And then here we are, where this path of what I've just kind of explained to you guys is really for funding a non-recourse multifamily loan. And again, I know this is a lot of words, but non-recourse loan is, in case of default, it does not allow the lender to pursue anything other than that collateral. However, a recourse debt holds the borrower personally liable. And so on any kind of loan like this, you're probably looking, 60 days, could be even a little bit more. I know, like, just in the last few months, they've been overwhelmed and appraisals have been taking longer than usual. So you just want to make sure that when you're negotiating, that you're giving yourself enough time based on that current, like our market, right? Everyone knows the market's been pretty crazy right now. So banks are overwhelmed. Give yourself enough time to close the transaction, and, just enough time to go through all this stuff, because there's a lot of stuff that's required. And I think that's all I have for you guys. Let's get some questions going. Where are you guys at in this process? How can I help you guys? Any questions? Hey, Chris. Chris, do you hear me? No? Okay. Any questions? There's quite a few of you here. Lemuel, anything I can do? Now, what's your name? I know you and I have been talking. What is your name?
Hi, I'm Kevin. I'm chiming in here from Newport Beach, and I'm
Nice.
originally from Seattle, where all my rentals are. So I've lived here a couple of years, just blown away by how expensive real estate is in California. We cannot find a home for sale in our zip code for under $2 million. So struggling to figure out how we're going to eventually own a property. And of course, questioning right now if it's even the right time to buy a single family residence. But every conference I go to, and I'm in the title and escrow business, by the way. So if I'm allowed to at least offer my support for any of you, I can get you into the title chain, and I offer free software so you can examine the background of any property, if it's public. And so would love to help anybody with their transaction.
Absolutely. Make sure to post your information on our chat, and then people can copy and paste that.
Would love to.
Yeah.
Would love to. So I've got 5 rentals. I started when I was 21. I'm in my 50s now. I can't believe how fast people like you, Annabelle, can grow a portfolio from nothing. And I've struggled my whole life with single family rentals and a couple duplexes, and just bought a triplex under contract that I was describing. And yet I run into people that have been in it 4 or 5 years, and they own a couple hundred rental properties. So it just blows my mind what some people are able to do in this business. And I was formerly self-employed, couldn't get jack for credit, always wheeled and dealed and did owner financing deals. I once bought a commercial building with $35,000 down. It was in a foreclosure. I knew the guy that was losing it. In fact, I moved my business, a sign company that I owned, into this building, and almost, and then I got a foreclosure notice on my front door, and went to my friend and said, "What the heck, dude? I just spent $20,000 moving into this place, and now you're going to lose it." And so I kind of respectfully demanded that he quit claim it to me. There was no due on sale clause in that note. So I pulled up the note. That's why you need a good title person, so you can get that information. And the note and deed of trust did not have a due on sale. So I was able to have him quit claim that property to me, and that made me assuming the note. I made back the back payments and took over a commercial building. So by owning a commercial building, I saved my business, and I split that commercial building. It was about a 10,000 square foot building, and I split it into 4 units. And then I basically failed to pay my employee taxes that quarter and used that money too. And so recovered, and then ended up going through divorce 2 years later and sold that building and made 30 times my investment. So there's no joke. You buy real estate at the right price,
Right.
you can do well. And so anyway, I took that cash, paid off the divorce, and then bought another property right now that I'm going to convert into a adult senior living place
Nice.
in Tacoma, Washington. So we'll see how that goes. But
Very nice.
well,
I'll be honest with you. I think where you will see the growth is really in multifamily. The single family, buying like individual single family, it's I know there's people out there that's all they do, but I think where I see, or I've seen the growth is really been in multifamily. There's, you improve the property, you increase the rents, that's what determines the value. It's not like comps where, you have your property's worth whatever the other one's worth, kind of, if it's sold for that price. No, it's based on your properties. What is your property producing on a monthly basis? And, I don't know. I mean, I follow Grant Cardone, and he talks about like, get rid of single family, go out and buy units. And I've had that. I don't know. I've just always really had that in the back of my mind. And I did single family resident flips for many years. And I did manage, I owned 2 to 4 units, and they were always problem. They never were like these 34 doors, it didn't matter if 2, 3, or 4 people were problems. I still had another 30 that weren't a problem, and
I never thought I could walk into a bank and borrow $3 million, right? I mean, I've got a W-2, I got an income, but back when I was self-employed, I could show I was making 30 grand a month, but I couldn't qualify for any loan. When you're self-employed, it's really hard, especially as a realtor or broker.
Right.
It can be really tough. And so I'm just surprised that you were able to find a bank to loan you that much money.
But remember that it's not based so much on your income. It's based on the bank needs to make sure that this property will sustain itself. And back then, when I obviously I got seller finance, so I didn't have to really go through that. But by the time I refinanced, by year 2, my property, I had already put in a lot of money into it. We went from $400 a month rent to like $650. And then from, these are like the 1 bedrooms. And then my 2 bedrooms went from like 500 to like 850. I mean, it was like massive growth. And that's why my property doubled in value by year 2.
And you didn't lose a bunch of people during that transition? They're like, oh man, you're raising the rents and we got to move.
No, we got rid of people. We were giving notices. We were vacating everyone. We wanted, first of all, let's analyze this. If someone's paying $400 a month in rent and the place is roach infested, there were drug people there. I mean, it was just not a good property. They're not going to be good tenants. So I knew I needed to just kind of come in and clean house. Let's just get rid of it. Let's start all over. We had our vision. We're going to remodel these units, make them really nice. And we are going to allow people that want to go through our process, to be tenants at our place. And you know what? We did a full background check. And before we ran and did anything, we would ask them, is there anything on your credit or your background? Because we are going to run a background check, anything I should know. And you know what? If they knew that we were going to do a background check, they wouldn't even apply. And we weren't there to make $50, $60, $70 application fee. Yeah, that was nice. But we wanted to make sure we were putting in, people that were going to be responsible.
Can you tell me, on account of, I was going to say probably on one hand, but can you tell me how many times you took a chance on a former felon or somebody that had drug trouble and they actually worked out okay and lasted more than a couple of years and did well?
I think we probably had 1 or 2 that.
And how many that didn't? It fell off the wagon and really caused a problem for you?
I don't even think, I don't think we really had any problems. I mean, probably 1 or 2.
That's where I've made some mistakes as a landlord, is trusting some people that said they were, back on track and reformed. And
no, I think that we were a little bit more, we have kind of our checklist, and we'd let them know up front what our, what our requirements are, and that we were going to verify and that we were going to check all of that. And if they felt comfortable enough that we'd accept them, they would go ahead and fill out their application and do what they needed to do. And if they felt that, we're not going to get accepted, they wouldn't even come back. And we didn't make exceptions for, if they had something serious on their background check, would show up, there were no exceptions. We have 34 doors. We want it to be safe for everyone. We don't want to put anyone at risk.
Now, Annabelle, since buying that 34 unit complex, have you purchased others? What's next for you?
Yeah. So I have actually sold my 34 doors. I am investing in I'm not supposed to say anything, but I'm invested in a large project here in California, believe it or not. I can't give a lot of details just yet, but I'm invested in a large development project here in California, in the heart of LA. And I've also invested in, I am part of a group of a syndication. I've invested 300 doors in El Paso, and I have another 180 doors in, I believe, Houston. So, I'm kind of now
Running it.
because I've learned, I'm putting my money in different properties, and I still am a firm believer that multifamily is the way to do this. You should probably, I mean, I don't know, the market's so great right now, maybe sell everything you have, right? And then just hold for a bit, right? And just keep your eye out. And I think that there's going to be some good opportunities there, multifamily, and make sure you pick landlord friendly states. And there is a list on the chat. So make sure you guys take that list, landlord friendly states.
I'm warning all of you to heed that advice, because right now I'm owed over $20,000 on just 3 properties.
That's crazy.
People that took full advantage of the emergency legislation that Jay Inslee passed in Washington State.
Mhm.
And one of the tenants who bailed after 7 or 8 months, I've got the state telling me that, yes, I qualify for repayment because of the pandemic to assistance to landlords. And by the way, most landlords, the only way you'll qualify for assistance is if you're low income yourself. So, show me a landlord that's low income and I'll show you something that's about to lose their property, because you need to make money. You need a buffer to hold on to your real estate. But they're telling me, the state of Washington is telling me it'll take over a year to give me my check
Wow.
on just one
And
tenant.
I mean, right now that the market is so hot, Kevin, if you were to list these properties with tenants, do you think that you could sell them?
I know the market is strong in Seattle, Tacoma, so I would. I shudder to think that I'm going to pay the government all this capital gains. A couple of these properties are on free and clear now, and they have a lot of equity, and I'm just going to, and then there's the depreciation recapture that the government gets, right? So all the depreciation I took, I will end up paying back. And so I honestly don't know what my game plan is. And that's why I'm going to these conference calls, because I want to learn from people like you.
Mhm.
What should I do? I agree. Multifamily is sexy. You've got one manager for a whole bunch of people rather than me chasing around a bunch of my own tenants.
Mhm.
You capitalize on the economies of scale. Multifamily are
Right.
very beneficial. And some of my personal friends that are in it have, over the last 10 years, become very rich, versus me. I've run around replacing individual toilets and chasing individual people for rent. And now I've learned how to do my own evictions. So I'm in court doing summons and complaints and serving people with paperwork, and what a mess, right?
No, yeah, you don't want to do that.
I think I could have a conference like this on what not to do in real estate.
That's right. But you know what? I mean, that's so, and it's so true for all of you that are on this call and, may not have these issues. This is so important, because what Kevin is sharing is so real. It is super, super real. A lot of people go through that, while there are other people that say, you know what, I don't want to deal with that. And instead of doing like the single family and like you're managing it yourself and you're doing the repairs and you're like trying to save, what is it? What's that saying? You're saving pennies and losing dollars, kind of,
Holding a nickel up too close to my eye to see the dollar behind it.
Exactly. And I think, you know what, you probably, I mean, again, I don't know your personal, like your finances, but I would probably sell everything and figure a way, obviously talk to your tax, your CPA, sell everything, maybe go into a syndication, and you will get a K1 from that syndication, which will offset whatever capital gain you have to pay. It'll just offset it, and you're done. And you now are, maybe part of a group of 300 doors, right? And you will get cash flow, and you won't get phone calls anymore, and you don't have to do any kind of repairs, but at least it'll give you an opportunity right now in this market. You cash out, and maybe, you invest in a syndication that these syndicators are getting a better deal because they're buying 300 plus doors, and you can get yourself into something like that.
And I am looking at some commercial syndications, actually, through like National Retail Partners or some of these other firms. They'll go buy a huge shopping mall And they'll, it'll include movie theaters and an anchor tenant like a Walgreens or a big grocery store. And they're paying, 15%, but I'm still a little confused. Do you come out on top with the appreciation in the property as well? Or are they just paying you a percentage?
Everything.
Everything. Okay. So it's just like you own
Yeah,
it,
no.
but you're a minority partner.
Yes, you own it. You get cash flow. Okay, every syndicator has, a couple different things, but pretty much you get cash flow just like you would your own property. But if they're going in and doing work to the property, you may have to, it depends. You may not get cash flow for maybe the first 3 months. Maybe it kicks in on, 6 months. It depends on what the agreement is. But yeah, they try to get you your money back within 3 to 5 years if they can refinance the property, because they'll go in and start rehabbing, increasing rents. If they can refinance, cash out 100%, they will pay all their investors back their money. And you still own a piece of that property and you still get cash flow. So if you're looking into that, definitely, come back. I have great relationships with 2 syndicators that I'm personally invested with that I don't mind sharing. And, they're people that I trust. And if I'm personally invested, that's the only way that I will recommend someone. If I'm not, then I won't, because, I don't know. Right. And so I urge you guys to come back, and I'll have a syndicate. That's the purpose of this weekly call. I have syndicators, I'll have agents that have deals. Last week, they were presenting a couple deals in Kylene, Texas, and in Laredo, Texas. These were anywhere from 40 to 58 doors. And so just, this is just it's a weekly call. It's 2 to 3 p.m. Pacific Standard Time. I'm here, pretty much, I'm just an open book. I'm sharing my experiences, what I've gone through, in hopes that really it helps you guys. And maybe you're struggling with something right now, and something I say kind of just triggers and sparks something, and it makes a difference in your life. And this is recorded, it's live streamed, it's recorded it's on YouTube. So make sure to check out my YouTube channel and like it, and just connect with me. You guys have my information. I will, I don't know if Jess, you can post that, or I'll post my, my info, and feel free to reach out to me with any other questions. It says, someone asked me a question here. Can you do a 1031 and go into a syndication? Yes. However, you have to go in, it's called a TIC, a tenant in common. And you have to go in, the 1031 has to be presented to the syndicator before the syndicator actually goes and gets a loan with a lender. And let's see here. Any other? Oh, Kevin, what app do you have again to analyze deals?
Okay, so I put a chat in there. Most title companies will offer you access to something similar to this. Commonwealth is part of Fidelity National Financial, so that's the largest title company in the world. They own us, they own Fidelity, they own Ticor, they own lawyers, they own Chicago Title, so, and 15 other brands. So Black Knight Financial, or Black Knight Data, is a company that Fidelity owns, that we all have access to. So by giving you a free username and password to get into this website, you can search either by zip code or by drawing a map or selecting a city or a county, and you can pull up very specific metrics on real estate. So let's just say you wanted to look for an apartment investment between 5 and 20 doors that is off market. I mean, you can go to LoopNet, you go to CoStar, you can go to Realtor.com or any site, Redfin, and try to search for properties. But let's just say you're looking for a particular property. You drove by an apartment complex, and it's a rat hole, and you're thinking, hey, there's a value add play. I can buy this. And this is what I did to buy my last property. It happened to be across the street, but it was a board up. And I looked in the title chain to find out who owned it, got her address, and wrote her a letter. She didn't respond. And so then I sent flowers. And I said, hey, I'm very interested in your building, and I'll be happy to pay you 12% on your investment rather than you just sitting on this equity getting nothing. and she bid on that. So we started talking and we negotiated, and it took a year, but eventually the persistent person will win out, and I got the property. And so having access to the title chain is the key to that. Now you can get on some counties and pull that information, but I'm offering it free. I would just like to handle your deal for you. If you purchase something or sell something, use Commonwealth, use me as your title rep. I'll be happy to, I've got a team that closed SoFi Stadium, Allegiant Stadium, Disneyland's expansion. We can handle anything. But, I cater in the $1 to $4 million range of most of my deals.
Fantastic. Awesome.
Yeah.
Great information. All right, guys, we are coming to an end here, and just wanted to remind everyone that, again, we meet every Wednesday, 2 p.m., 2 to 3, 2 p.m. Pacific Standard Time. I do have my YouTube channel. You could watch this. It'll be a recording, and you guys will also get an email with the recording, and I'll make sure you get the slides as well. And if you guys want to connect with me, feel free to email me. My information is on the chat, and I look forward to seeing you guys next week. And if you guys learned some good stuff, share this with others, and I hope to see you guys next week. All right. Have a wonderful day. Take care. Thanks, Kevin.